Hey y'all, Weldon here, and today's video is specifically talking about 1031 exchanges. You might have watched some of my other ones about leasing out your property, and then when you go to sell it, perhaps doing a 1031 exchange. Well, what in the world is that? And today's focus is explaining that a little bit more. Now, real estate, it is an incredible wealth building tool, and this is one of the parts of the IRS code, so 1031 specifically, that helps with that and why it can be so lucrative. In short, though, a 1031 exchange is a deferral of any taxes that you might be obligated to pay based on the capital gains in a sale of your property or or the recapture of depreciation of that asset over time. So what I mean by depreciation is the government allows for, if you buy a home, let's just say for $415,000, you divide that by 27 and a half based on today's laws, and you're able to depreciate that amount per year, and it offsets any kind of income that you might have received. But when you go to sell it, the government then recaptures that depreciation, and you end up paying capital gains or taxes on that amount. So I'll caveat everything I'm saying today with I am not a CPA, but I do investigate what is out there to better inform myself of the opportunities. And so today I'm using investopedia.com, and then I just search for 1031, and there's an incredible article here. I will post this down in the show, in the description section of this YouTube video for you to be able to click on it and learn about it for yourself. But as a quick overview, basically, if you decide to sell your investment property, you want to use a 1031 exchange, or you decide to use a 1031 exchange, it's an external agent, then in that case, you never want to actually receive the proceeds from your sale. It goes to a third party. And then after that, you have an obligation to identify up to 3 properties within 45 days that you're pursuing, and then close on those properties within, or one of those properties within 180 days. And then you're going, whatever you sold that previous property for, also that next property needs to be at least that amount, or at least $1 more. That way, again, in the government's eyes, you have deferred the capital gains. You're continuing to bolster the economy, or at least invest into the economy. And it's a tax break that you get to hold on. It also, or enjoy. It also helps with estate planning. So you could hold on to an asset generating, or an income generating asset for your entire life. You take that depreciation, and again, you can do 1031 exchanges in theory and perpetuity, and then pass that down to your heirs, in which case, based on today's laws, that depreciation schedule starts over for them. And so, again, validate everything that I'm saying here with your CPA. But and then, of course, as laws get updated, this article or Investopedia should be updating as well. Learn about it and the incredible opportunities that might exist. Call me if you have any questions, and we'll walk through it together. Thanks, and have a good one.